Hello and welcome to this week's edition of Echo45 Advisors Market and Economic Update. In this video, we'll discuss how to interpret the mixed signals we're seeing in today's economic data. This is especially important given today's questions around the reliability of government data. The issue has even led to President Trump's firing of the Commissioner of the Bureau of Labor Statistics. Over the next few minutes, we'll explore what these mixed signals mean for your investment decisions and why taking a broader perspective is crucial in today's environment. First, the latest employment data showed some troubling signs. Only 73,000 jobs were added in July, which fell short of what most economists were expecting. But perhaps more concerning were the substantial downward revisions to the previous months. As you can see in this chart, the May and June employment figures were revised down by a combined 258,000 jobs. That means the economy was significantly weaker over the past few months than originally thought. These large revisions have sparked questions about whether we can trust economic data. And this is actually an important question because this data forms the foundation for everything from Federal Reserve policy decisions to our own portfolio decisions. It's important to remember that government data, like any data, is not perfect. These numbers come from surveys of thousands of businesses and households. They're estimates, not exact measurements, and should be viewed with that in mind. There's always a trade-off between getting data quickly and getting it perfect. Government agencies release reports on strict schedules, then revise them multiple times as more information becomes available. The revision process is actually a strength. It allows for continuous improvement in accuracy, but it also means that individual numbers should never be taken as fact. Despite these limitations, U.S. government data is considered to be the gold standard. These agencies maintain high standards and are staffed by professionals who have served under many different administrations. That said, some tension between politics and economic data is unavoidable. There are always incentives to show the economy in the best light, and it's often difficult to prove whether a report is politically motivated. This is why maintaining a broad economic perspective is so important. To maintain this broader perspective, it's crucial to look at many different indicators, both public and private. In investment research, we call this mosaic theory, the idea that disparate pieces can form a comprehensive picture. Jobs, growth, inflation, corporate earnings, and consumer spending all provide valuable pieces of the puzzle. And right now, these pieces are telling somewhat different stories. While employment data has been weaker than expected, second quarter GDP actually rebounded to 3%, well above the long-term average. Tariffs remain the wild card and are one reason for such different views on the economy. As this chart shows, there are early signs that tariffs could be filtering through to consumer prices. The latest Consumer Price Index report showed that goods prices are rising, and the Personal Consumption Expenditures Index showed that inflation accelerated to 2.6% in June. For investors, it's actually normal for economic figures to point in different directions that might seem contradictory at times. This is why understanding the bigger picture requires looking at multiple data sources and maintaining perspective. We hope you found these insights helpful. If you would like help learning about how to interpret economic data or how these trends might affect your portfolio, please don't hesitate to reach out. We look forward to speaking with you.